It's totally clear that I don't play the guitar. It's not something I've mastered, but real estate is. Check it out. I'm gonna leave that to the musicians. When it comes to real estate, I'm the freaking conductor. Check it out. Today we're going to talk about short-term rentals like Airbnb, VRBO, and we're going to talk about long-term rentals as in I rented the house to a tenant and they lived there for 2 years and there was turnover and then someone else lived there and it's like, wait a second, Kris, these are two very different real estate games. Which one's easier? Which one's better? And yes, I own both of them and I do have preferences on what I think you should do. Now here's the good news. We're talking about two different strategies, but we are really talking about real estate. And when it comes to real estate, there are 5 different ways that we win. So I just got to kick off with a congratulations that you're watching a video about winning in the game of real estate investing because I became financially free at the age of 26 on a small portfolio. I started with nothing. 4.5 years later, I owned 25 rentals and they gave me 5 benefits. Number 1, they gave me cash flow. I was making about $500 off of every one of them. You can multiply $500 times 25 homes and say, Kris Krohn was making serious 6 figures. That's probably why he graduated college and didn't need a job because this money came in passive. Number 2, appreciation. I remember when I became a millionaire for the first time because I bought these homes, I bought them under value, and then they went up in value. That appreciation has made me a lot of money. Number 3, tax write-offs. First 7 years, I didn't owe any money in taxes because the depreciation on the real estate was so powerful. And to this day, it remains the number 1 write-off. You want to own real estate because it will give you your best tax write-offs. Number 4, it's a hedge against inflation. As in, when the value of the dollar goes down, the value of real estate goes up. And right now, we are in a really bad inflationary time. So guess what that means for real estate? Anyone owning hard assets are loving inflation. Anyone owning soft assets, 401ks, IRAs, stocks, and bonds. And then number 5, it is a hard asset. It's tangible. I can drive to it. I can touch it. I can lick it because it's something real. It's something tangible. Why do you think 4 banks failed in the last couple of weeks? Because the money is fake. It's not backed by gold. Thank you, Nixon, 1971. Real assets go up even during really bad, hard times. Well, let's start with the basic definition. Kris, what really is the difference between a short-term rental and a long-term rental? And we're going to use the magic number 29. Any rental that is 29 days or less, we're going to call that short-term. And the goal is to put several different people throughout the year in that home. But if it's longer than 29 days, it's probably a long-term rental. You're going to have a family there for 6 months, likely 1 year, and it could actually be years. And we're going to vet these 2 strategies. More money to make here, more money to make there, which is at Kris Krohn. So let's jump on short-term rentals. Let's look at the pros and then the cons, and then we'll take a look at the long-term game. So on short-term rentals, you do get increased cash flow. You can find properties where you literally can make 3 times more cash flow. So it's like, Kris, are you telling me when you bought an original rental and was making $500 a month, are you saying that there's a short-term rental out there where I could make $1,500 a month? Yes, that is a real possibility. And you can adjust the pricing based on the demand. So the market doesn't determine the rental rate. It's the niceness of the house, the area, its location. Did you do everything right? Did you put in all the right amenities? And all of a sudden they're like, oh, we'll pay $300 a night. No, $600 a night because of how you have this set up in the right location and it looks fun and awesome. And then of course, you don't have a turnover problem that you have with long-term rentals. You're actually, as a strategy, trying to get turnover. You're charging cleaning fees and you want to rotate as many people through there as possible because your rates are a lot higher on this than you would with long-term rentals. So far, looks pretty dang sexy. But there are some disadvantages. Primarily, you got to do a lot more research, right? You're going to have to furnish this thing differently. You may have to drop $20, $30, $50, $70,000 into it up front to get all the proper amenities like Airbnbs with pools, they're the first ones to get rented out. You have to understand the avatar of your market, who's actually looking at renting this thing. So there's a higher level of expertise. You also have ordinances and neighbors that you need to worry about, because what if your city changes its mind? What if they change the rules? What if one day they say, no more short-term rentals? For some people, they're going to be screwed. And then lastly, it can be more capital intense. Like getting one of these up and going, wow, I've got to buy 7 sets of sheets and pillows walk off, and someone might walk off with tchotchkes, and I do have to line up a company that's going to do the management. And these property management companies are different. They can charge 15, 20, or 30% for managing your Airbnb. And it's like, wow, this is like, there's a lot of fees that I have to absorb in this capital intense game. I might make a lot more money, but it's definitely going to cost a lot more to play. On the other hand, let's talk about long-term rentals, right? There are some pros that you want to be aware of. There's some cons that you're going to want to be aware of. And then at the end of the video, I'm going to share with you where I make the most money. Because I'm going to tell you right now, people get caught up in strategies and they get lost on strategy. And I say, well, actually at the end of the day, which one long-term is going to financially produce the most? I will answer that. Long-term rental benefits, way more hands-off. It's passive. It's not an active business. You're not taking regular phone calls. It's set it and forget it. You also have predictable cash flow. So it may not be as high, but it's constant. And that's a nice thing. There's not a high season and a low season. It just is what it is. And there's less regulation, as in no government, no city's going to come in and say, hey, you can't rent this property. Well, the reality is you have a high percentage of America that is renting versus owning. This is standardized. This is normalized. And if you become an expert in this game, you can figure out how to go after the highest ROIs that are out there. And there are some very real disadvantages. For example, you've got locked prices for the lease. The market is going to determine the rent. It's not like you can throw money to amenities, add a pool, do other stuff, and then be like, oh, well, normally we would charge $1,600 a month, but now we're going to charge $2,000 a month. The market won't bear that. The market says, well, yes, the place that is the nicest will be the first to lease out, but it's not like your amenities are going to cause it to rent for hundreds of dollars more like an Airbnb. It's fixed. And that's kind of a two-edged sword. It's a bad thing because there's not much you can do to actually improve the price, maybe the value of the home, but not really the rents. On the other hand, you really can't do a whole lot to lower it either, and there's some predictability. And lastly, you are going to have to spend some money on turnover. It's like, well, that family stayed there for 3 years, and when they left, we had to do some lipstick and paint. We had to put a little TLC into the home. We had to restore some of its former glory so that it was re-rentable again. Okay, Kris Krohn, which do you prefer? Well, I'll tell you that I love automation and I love scale, because if something works once, I want to do it 10,000 times. I don't want to reinvent the wheel. Airbnb, that type of short-term rental game, it's very intense. And while I do own some of them, I can tell you right now, it does not scale the same way. It's boutique-y, it's specialized. And if I wanted to acquire 1,000 of them, that's a different kind of game. In the rental space, out of 324 markets, I go into the top 5 where I'm going to get the best appreciation, where I'm going to get the best cash flow, where I'm going to get the best growth, where I'm going to get the best tenants. And in those markets, I dominate and I secure an ROI so high that I can outperform normal retirement no less than 27-1 over a 20-year span. So at the end of the day, for me, it is the long-term rental game because it's a machine, and I can build a machine that builds a machine, and boom, it manages itself, and it really truly is a passive game so that I get my time back, I can build businesses, and I can play other games while this one continues to multiply and get bigger and bigger and bigger. Imagine for a moment buying a single house. Let's say you have $50,000 in a 401k, an IRA or equity in your home, and you just managed to say, you know, this money over 20 years will triple. 50K at 6% will become $160,000. But in real estate, it could become at a 25% ROI, $4.3 million. And if you're averaging 34%, it becomes $17.4 million. That means that one house has a chance to change your entire destiny for legacy, longevity, for generational wealth. It can change everything for you. Now, if that's a game that interests you and you're like, yeah, Kris, I need short-term money, but I want to figure out the long game too, then click the link below, get with me and my team, and let's talk about how you can get some money from that 401k, IRA, home equity, and put it in the game of real estate intelligently with a partner that will do 100% of the work, and in this partnership, allow you to be passive so that we can grow incredible wealth together. Click the link. Let me show you what that looks like. There is a strategy that will rival short-term rentals, and I can squeeze out double the ROI than a straight rental. And if you want to know what that strategy is, I call it compassionate financing or lease option with a twist. Click this link, let me show you what it looks like. It's super, super cool. It's also how I created all of my original wealth.